Through our past travel, we learn that monetary calamities are a persistent cycle, continuously fueled by the same destructive double-dealing. We saw how states worked. Indeed, the wealthiest domains like Spain within the 16th century, their consistent collapse beneath their claim obligation was a confirmation to the esteem of political teach over gold. But the story must presently move. Whereas paramount obligation extends a emergency, the disastrous start is more often than not struck by another institution, the banks. How does this borrowing free for all really crawl into the managing an account framework? The exceptionally heart of an economy, and once a keeping money. Emergency is unleashed. How does it condemn a country to a decade of financial stagnation? Usually the story of the money-related system's failure, the most serious, the longest lasting, and the foremost difficult catastrophe an economy can persevere. Let's uncover the four guileful, rehashing stages behind history's most noteworthy bank collapses. A managing an account emergency never begins with a sudden crash. Its seeds are sown discreetly amid seen times of uncommon success. Monetary teach, driven by the overconfidence that this time is diverse, start to require on progressively over-the-top dangers. The playbook is indistinguishable each single time. Cash surges the markets, driving banks to quickly increment loaning. The banks begin working with extraordinary use, meaning they pump distant more cash into the framework through credits than they really hold and secure substantial saves. This is often a calm, undetectable bet where the bank guarantees distant more than it can ever convey. This surge of cheap and accessible credit immediately blows up whole resource markets. Genuine domain costs, stocks, or other commodities start to segregate from any sensible reality, making the credit bubble. The costs are not based on esteem or generation. They are based exclusively on the trust that somebody else will pay more tomorrow. At this perilous range, each agent and controller swears that this bubble is special, advocated, and won't burst. However, history demonstrates time and once more that the collective ravenousness inside monetary teach unavoidably triumphs over arithmetic. The complexity of modern money-related instruments, no matter how intelligent they seem, only serves to cover up the most seasoned hazard of all. As well, much obligation built on sand. The minute the credit extension moderates down, or when a minor outside shock, like a little corporate insolvency or a central bank rate hike, occurs, the chain response starts. The emergency enters its moment, annihilating stage, the obliteration of certainty, typically where the fancy smashes. As the credit bubble savagely bursts, resource costs crash. The collateral, the genuine domain or stock securing the loans, is presently worth a division of the obligation. Banks right away realize that the enormous advances they issued against those swelled resources will never be reimbursed. Their adjust sheets right away turn into colossal heaps of harmful, useless obligation, which must be accounted for. Freeze at that point spreads through the open like rapidly spreading fire. Individuals, startled that their bank will collapse and their life investment funds will disappear, surge to the teller's window to pull back their stores. Usually the notorious bank run, a characterizing awful minute of budgetary history. Since banks work on use, they essentially don't hold sufficient cash to cover all stores. The primary ones who run survive. Those who hold up lose everything. This deadly winding of fear and flight paralyzes the whole budgetary framework. The disappointment of one bank, a nearby disappointment in a apparently little corner of the market, swiftly cascades, bringing down each connected institution like dominoes over the complete nation. The issue is not a single bank's issue. It has gotten to be a obliterating systemic collapse, a total misfortune of confidence within the whole money-related framework. This misfortune of confidence is the genuine executioner. When the prompt, clean, of a managing an account emergency settles, the harm cleared out behind may be a scar that keeps going distant longer than any other budgetary adversity. Chronicled information affirms in verifiable truth. The financial droop taking after a managing an account emergency keeps going distant longer than the consequence of a outside obligation emergency. The reason is basic, however unfeeling. Banks are the economy's imperative circulatory framework. When they halt, credit dries up, venture solidifies, and the economy passes on. Financial development. The coming about stagnation is brutal. Investigation over centuries appears. The droop keeps going for a normal of 10 a long times. 10 a long time. Think around all the misplaced efficiency, the misplaced employments, and the misplaced riches, era potential. Bolted absent for a complete decade. Government obligation. To avoid a add up to collapse and regularly to secure those who cause the mess, governments are compelled to spend huge sums of citizen cash to safeguard out the falling flat budgetary teach. This galactic fetched right away skyrockets national obligation, driving the emergency right back to the point of paramount obligation default. The keeping money emergency, hence, triggers and amplifies the obligation emergency, completing the cycle of destroy. Resource costs. Recuperation is moderate and agonizing. Genuine domain and stock costs take, on normal, a long time to claw back fair half of their beginning soak misfortunes, catching a complete era in decreased riches. In brief, the managing an account emergency is history's extreme discipline, sentencing a country to a decade-long financial jail sentence. We have presently fastidiously followed the complete life structures of the keeping money emergency, from the pomposity of intemperate use to the rough showcase adjustment, the freeze of the bank run, and the ensuing decade of financial stagnation. Don't forget to subscribe and turn on those notification bells so you don't miss the rest of the series. We continue listening to those painful truths that history whispers to us. For now, take care and stay in the markets. See you soon.